Babylon fret. Most of this every deal I make Babylon fret. Them this little lion and a judgment bitch. Cause the whole of them, oh yes, oh yes. Can't sleep at night, the man I worry and fret. Little lion them. I know Sakira Fire representing little lion, know the chingo. Oh, them not bad like the lion. I them not bad like the lion. Who I used to let them get flying. Put the whole of them in the fire. This little lion, them a dying. Oh, so you see I live it every time. Little lion when you bad die wild. Oh, when you can't sleep at night, the man I worry and fret. A true lion, them want to disrespect. Them don't get the warning, this is the threat. I said my rock and I have bullshit. Hypocritical mockers, watch all yourself. Oh, you're this little lion, you feel think and check. Oh, you feel this the high priest, make sure the excellency. When the north, south, east and the west, the right and right, and the septine and left. Oh, you feel this the man when the man conquer it. The man gave us life and let us can glory. When you say little lion, turn the tongue. Can't sleep at night, the man I worry and fret. True little lion, them a disrespect. Them don't get the warning, this is the threat. The ice and marathon and a worship. The sound where them are the least and the less. The little lion not gonna lay them to rest. Why come outside, come sit down one step. We don't find them jam, them less than friendship. Should have missed the one with the golden precept. Should have missed the one that control the step. From the other cover them can make Babylon fret. Most of this every deal I make Babylon fret. Them this little lion and a judgment bitch. Cause the whole of them, oh yes, oh yes. Can't sleep at night, the man I worry and fret. Little lion them want to disrespect. Them don't get the warning, this is the text. Nice and Malaga, what I know, oh. I'm talking to all pagan boys and girls, and all doctors and nurses in medical, and all teachers and all principals. That teach people them about the demonical, that teach people them about the supernatural. But why you make the people bow to idol? This little lion in a straight rival. Oh, go tell them no survival. Well, of them dead and the
We'll be back. We'll be back. We're gonna get into it tonight. Go get some popcorn, get your drinks, get your notepads.
The Xfinity 5-year price guarantee. You get 5 years of the most reliable Wi-Fi with our best equipment included. For a price that stays exactly the same.
Get your notepads. Get your popcorn. We'll be back. 9 a.m. 9 a.m. it starts.
But there is some gravy to be had.
9 a.m. it starts.
Primo parking. But you don't have to be a VIP to get more than just savings with Geico. Every customer gets
9 a.m. it starts. 9 p.m. 9 p.m. Eastern Standard. Get your notepads, get your popcorn, get yourself a snack. We're going to get into it tonight.
All right. Little lion song. What I feel like. So, oh, blessed is the man walking down the comes up and jolly. That's the way of sin, column. It's nice to get it on the almighty eye. Yo, little lion, no boy, y'all, little lion. Them city, yo, we trickle on, put them on, put them with the iron. Little lion, don't apologize to no jump man. If you're this little lion, then a rubber pam pam. You know what I mean? Because I get me, you feel me strong. Me, I feel love you pretty sexy black woman. Little lion, don't apologize to no jump man. This little lion, and a rubber pam pam. You know what I mean? I feel them sexy and them tam. Alright, this a song. Well, because them sexy and them stick a fat. Cute sexy girl, little lion, them looking at some boy bow down, to me what? Nothing in this young world could have been moving that. I don't care if the band real little lion sound, real champion, real from the upper moment, tell you something, show you hands here. But I'm calling me sound, little lion, don't say I'm Rasta man, don't apologize to no joke man. This Rasta man, and the people of the man. You know what I mean? Because I never want to die, no boy can't take over me land. Don't give them too damn nasty. One let them play for them, one like them crafty. Go them up the look at me I want some little so why don't be nasty. Only not the biblical, Friend never hurt. Hey, y'all let's send the lion sound of the best. See it starts on and well. Little lion don't apologize, but don't jump on. This little lion and a rapper bam bam. Brother jump bam and I see him so we jump. Brother never move it, tell you to push up your arm, push your arm. And they will make a little lion, you see with your big girls, never look him up.
Do you work with UWM?
Get your popcorn. Get a snack. Get your notepad. We're going to get into it tonight. Yes, I do. I work with UWM. Good evening. UWM and 140, 143, 144 other different lenders as well. Good evening. My name's Douglas Wilkerson. I'll turn it down. We'll get the intro. We'll get it going. There it is. We'll get it going. All right, ladies and gentlemen. If you don't know, if this is your first time here, how you doing, Blake? Thanks for joining us. If you don't know and it's your first time here, we are going to get this started. Let me get this out of the way. There we go. So I'll tell you a little bit about what's going on here. My name is Douglas Wilkerson, Senior Loan Officer and Branch Manager at Edge Home Finance. I go live all the time. I talk about how you can realize the dream of home ownership and how you can secure your financial freedom through real estate, through the use of real estate. If you do need to contact me, I believe there's a little Service Plus button like right there. If you want to come up and talk, hit the little people. That's me and you. I don't know if you're the pink one or I'm the blue one. I don't know which one. I do lending nationwide. Oh, there it is. Lending nationwide. All the states aren't there, of course, because TikTok doesn't allow all of the room, I guess. And then QM, non-QM, DSCRs, bank statements, FHA, VA. I'll show you a little. We'll save that for later when the guys come in, when everybody comes in, all the trolls who say they can't buy a house. But this is what we've all been waiting for. How do I get into a home? Can everybody see that? Everybody can see that, right? You can read everything. We got some captions up there for you as well. So we'll get right into it. This is, let me put it like this, actually, a little bit better. Might be a little bit better. Yeah? No? Yeah? Same thing. Anyway, this is one of the number one ways that we can, and I'll move this down so it's not in front of my face. I learned my lesson the other day. There we go.
How much does it normally cost for a rate and term Refi, in your opinion?
The price of it, it can be anywhere. It depends what you want to do. If you're doing a conventional loan, if you're doing a, and I walk around a lot, just so you know, if you see me on and off camera, it can be anywhere from $300 to $6,500 total cost with the. It depends what time of year. Also depends if your taxes are due. Depends if your homeowner's insurance is due. There's a lot that goes into it. We can go over your loan estimate or your closing disclosure or whatever fee sheet you have. If you like, we can go over it live. We can get on a phone call and go through that with you if you like. And I'll tell you, I'll be honest with you. You know, I'm not gonna try to steal your deal or anything like that. But depending on the type of loan that you're in, also, it might be that all of that is built into the new loan. Like a VA loan, you can add in all of the fees and everything like that.
Do you have to run credit?
Do you have to run credit? Good question. Depends on the type of refinance. Is it conventional or is it FHA? Or is it VA? What you would run credit for.
FHA.
Good. So what you would run credit for, and I specialize in these
Can you
because
explain DSCR loan?
I can, Mr. Flipster. So we'll get back to that in a second. But the FHA streamline refinance is the rate and term, right? So typically, depending on the lender you go with, you're going to run credit, and you're going to your pricing is based on your score. However, FHA guidelines in the and Fannie Mae Freddie Mac, the FHA 4000.1 document, it's like I forget how many pages it is. I think they're 400 pages or something like that. They don't require you to have a score. Lenders do pull your score so that they can set their pricing. If you have a 580, and most of them don't qualify you under a 620, right? Which is crap. But I have lenders that don't, and I only use those lenders when I'm doing FHA streamlines and VA streamlines because they don't pull a score. I had a person with a 496. They had so check this out. You know those companies that are like, oh yeah, you shouldn't be in debt and all this stuff, and what do? They pay off your debts for you or something and take a 25% cut. They negotiate in the middle. Your credit turns into downtown Baghdad at Tuesday. All right, Tuesday in downtown Baghdad. It's in the dumps. It's trashed. They just did that 2 months. They managed to keep paying their mortgage payment, right? So if your mortgage payment's paid and you don't have any 30-day lates, and it's important to understand that it's 30-day lates. It doesn't matter if you had a late payment, right? Like $30 fee on a 17-day late. When you get to that 30th day, you can be 29 days late. You get to that 30th day, that is going to disqualify you if that late payment, that 30th day late payment, is within the nearest 6 months. So from now until 6 months ago. Outside of 6 months, you're able to get another. So the 7th month, if it was the 7th month, they can qualify you, right? 7 to 12 months. But if you have more than one in a year span, you're not going to qualify for an FHA streamline. So back to this credit score. I did a 496. The person that just did debt relief, that's what it is. Person that just did debt relief, fell sucker to that, right? Did debt relief and had a 496 score. All of the, they managed to keep their payments, but I was like, hey, I know for a fact, I had talked to UWM, and UWM starts at a 620 score, unfortunately. I like them. They offer a lot of benefits. They give a lot of benefits to the borrower and had a pretty smooth process, right? But they also charge those loan level pricing adjustments for the score. So if you had a 580 score, let's say they went down to 580. If they had a 580 score and you're doing a streamline refinance, they would charge you one price, and it might be 0.5 basis points. So if you take 0.005 times, let's say you're doing a $300,000 loan, it's going to cost you $1,500 off the top, right? That's off the top just to do that loan, right? Now let's say you had a 800 credit score, it's not going to cost you anything, right? Because they don't have that loan level pricing adjustment there. If you had like a point, let's see, a 0.00125, and that was for your score 00125. So they were charging you an eighth of a point times your loan amount, $300,000, right? That's costing you $375 to get that refinance done, and then the cost of the refinance, the cost of the title, the cost of everything else, right? So I know for a fact that the FHA doesn't require you to have a score. All they require is that those mortgage payments are paid up to date. Does that help? DSCR. All right, you guys like the live? You can like the live just to show that we're not dead in here. Keep the chat alive. Don't send any gifts. Don't need any gifts. I appreciate them. Don't send them, right? It's not something that's needed. What I do here, if you're just joining, it's Douglas Wilkerson, Senior Loan Officer. You can Google this number. You can Google my name at the same time, and it'll tell you all about me. Appreciate the likes. I go live all the time. I talk about how you can realize your dream of home ownership and secure your financial freedom through the use of real estate. If you are thinking about buying, refinancing, selling, anything like that, you just click that little button down there, Service Plus, or you can just find my information up here. So Flipster, appreciate the likes. DSCR. So DSCR is a debt service credit ratio. It is a conventional loan in its sense, right? So it's 30-year amortizing, and how you get into a DSCR loan is you're going to put 20% down there. Some of them do 15%, right? There's stipulations, right? If you're a seasoned investor, but it is an investor loan, right? So it is for people who are trying to purchase investment properties only. You wouldn't purchase this with a primary residence. You would purchase, or a second home. You would purchase this with an investment property. You can do condos. You can do townhomes. You can do multifamily. You can do single family, right? But you have to have that 20% down payment. How it works is they qualify you, so you're not even going to use your income. You're going to use your credit score and the income that the property produces. How do we know what the property produces, right? We don't know anything about it. I mean, we can call the people and they could lie to us. They could show us lease agreements, whatever. But how do we know what is a fair market value for the property? What's going to happen is that an appraiser is going to go out and they're going to do a regular appraisal to appraise the value of the property, third-party opinion, right? Unbiased opinion. And then they're also going to they're going to attach to it what's called a rent schedule. It's a 1007 rent schedule. That 1007 rent schedule, you're going to get a top rent that you can charge, a low rent that you can charge, and a medium rent that you can charge. You're going to qualify off that medium rent, right? So let's say you have a quadplex, okay? And we'll talk a little bit more about this as we get into pricing for this, because this is, you can do this, the same investment strategy that you would with a DSCR, but you can do it with this FHA 203K. And I'm going to explain that. This is a super powerful tool that you can use. Should be inspirational for all those people this morning. I did a live this morning, and I think it went well. I think it went well. We had a lot of fun. There was about 80 people in here. Obviously, you know, there was a little prompt that made a lot of people upset, but they're not in here now, which is surprising. They may be playing their video games, and that's the reason why the prompt was up there. Spending virtual currency instead of saving that money. But the DSCR, so if, let's say you have a 4-unit property, and all 4 of those units are rented, you bought the property for $450,000, you'd probably have somewhere around a $3,400 mortgage nowadays, depending on taxes and insurance and what interest rate there is, but somewhere around a $3,400 mortgage. But you're going to have 4 properties, so you'll take those 4 properties. Those 4 properties are going to give you, let's say, $1,000 each, just to keep numbers round, okay? $1,000 each, and you're allowed to get 75% of that income, okay? So you're qualifying with 75% of that income is the lowest that you can go. Okay, so let's say you got $3,000 across the 4 properties, but the mortgage was $3,400, right? Let's say it was $3,400 to $3,400, right? The mortgage is $3,400, and your rental income across those 4 properties was $3,400. That's a 1-to-1 ratio. That's what they want to see. They want to see that does the rent cover the mortgage, right? That's all. So you're talking credit score, and does the rent cover the mortgage? And that's it. After that, title has to clear, the property has to appraise for the value, and you have to put 20% down, right? As you get more seasoned, you're into your 2nd or 3rd property, or you have other rentals. Let's say you moved out of your primary residence, bought another primary residence, and you rented out your primary residence, right? You wouldn't need a DSCR loan for that because you already have a mortgage on that. You're doing it yourself, right? You didn't have to put money down. You put what's, sweat equity. Can you use a DSCR for fix and flips? Fix and flips have their own loans. And I'm going to tell you something that is unknown, not well-known product for fix and flips is delayed financing, right? Delayed financing. Not everybody offers it, but we do, and you have to know how to structure the loan also. But delayed financing, how that works is you can actually go buy the property, do the renovation, and the financing won't start until after all of that's done. That's a powerful product, right? Helps a lot of investors get to where they need to get to without paying a bunch of loan payments. So the loan closes, the financing hasn't started yet. You finish the you go through the renovation, finish the renovations. Let's say it's a bathroom, some floors. It'll take you 2 months to get it all done, right? The financing starts after that, right? So similar to like a one-time close construction where you buy the land, you build the property takes 6 months to build, the loan is already closed, you're not paying any mortgage payments until the property's built, till you get the certificate of occupancy and you leave. Should be 640. Most people, a 660 FICO is probably your best entry, is like the entry barrier. But you can do 640, right? Fix and flips and delayed financing and one-time close constructions and FHA 203K. Actuality, this is a lot lower. This is why this program works. Let's get into it. If you have any questions, you guys can do it. Let me see what that question says. Question says, could we use our corp? Yeah. You're doing flips now, right? They have specific loans for flippers. Oh my God. After renovation value goes into the delayed financing, right? A lot of those things. So I want to say something. These calculators, people still use these calculators, man. You know what I'm saying? It's simple. Sometimes I don't know what 6 + 7 is. I want to make sure. Okay. All right, let's get into it real quick. All right, so limited inventory issues, right? So
Wholesaling
we
full
wrote.
time and you need to shift into keeping these properties we
There's
acquire.
a smart guy right there. That's a smart guy right there. You want to diversify your assets, absolutely, and switch into keeping these properties we acquire. Yeah, I hear you. I hear you. And I'm going to tell you something. If you're selling these, let's say you're flipping them, or you have them, this is something that you can actually use. We're going to get into it right now because realtors are selling properties. Let's say the roof is damaged. Let's say you have some structural damage. Let's say the windows are old and trashy and not sealed properly. Let's say the foundation is messed up. Let's say the septic is trashed. Let's say the well is not passing the test, right? Tons of different reasons. They wouldn't pass an FHA appraisal. They wouldn't pass a VA appraisal. They wouldn't pass a USDA appraisal because those go off of safety, sanitary, and structural, right? If those three things are good, they're going to pass it. But if they see like old, any not even old paint, but any paint that's like chipping or anything like that, peeling, they're going to require you to rectify that. So what do? Realtors say, hey, this is conventional or cash only. And they're killing themselves. They're killing their deal, right? And I hope we can use that word on TikTok. I don't know. Let me get my 100 likes in real quick. Let me just get my 100 likes in real quick and we'll continue. What we want to do is we want to take this, we want to offer that FHA product, the VA product, but we want to offer it as a renovation. So if we're listing the property, we shouldn't limit ourselves to not making a commission, not making a sale for the buyer. We should just be, when these buyers approach, they see the property and then they're like, oh man, we thought that this was going to be.
California, can you help?
Yes, sir. All the states right here, lending nationwide, right there. But you don't want to limit yourself in a listing that you could get a VA renovation loan. You can get an FHA renovation loan, right? And you can do this. I'm going to show you in a second how first-time home buyers can get in there as well.
It's cut off halfway on my screen.
Which part's cut off? Oh, this part right here? Yeah, I might have to move it up. This is where I stand, so it's like there's no real place for it. There we go. You should be able to see it a little bit better now. All right.
Yeah.
So there we go. Let's get into it. So some of the challenges that the real estate agents have, they're working 40 hours to get the contract, and then work begins after that. Buyers previewing 10 to 18 listings on average. They may have a bunch of things that they want to be done. So how can this renovation solve these problems? Is they can go to any street and say, hey, I want to live in that property. Does the property appraise? Right? Does it have structural issues or anything like that? Any problems? Right? Fences, roofs, flooring, kitchens, any of that stuff.
How fast can we close on that loan?
30 days. 30 days. And it really matters about the contractor. So we'll get into it. And all of this is in here for you. But renovation loans allow buyers to customize their personal home, and it may be their starter home, and then turn into a dream home. Right? So a rehab loan is what the 203K is. There's also a conventional version there's a conventional version as a home style. Here's the caveat to this, okay? So this loan is for your buyer. Let's say you have a property that you have that's sitting on the market, right? And you're like, man, we haven't gotten a chance to flip this yet. We know it's valuable. We know there's some value in it. We've already gotten our, whatever money there is. But you would have somebody move into this property. So that's how you can get the FHA 203K loan, is you can have somebody move in. If you're not having somebody move in and they want to buy it strictly for an investment property, you would use a home style. So that's the biggest difference, right? And we'll show you like how this is supposed to work for first-time home buyers, right? Because you can be a first-time home buyer, buy a $450,000 property with $55,000 a year in income, right? Sounds pretty crazy, doesn't it? Anywhere. It can also be utilized as a purchase, a no cash out refinance, and the repairs and upgrades have to be to the existing structure. Let me get to this page. All right, so here it is, one loan, one closing. Here's the biggest thing about this property, which helps people the most. You can do, so I got it right here, FHA, renovation, right? For purchase, multi-unit. We can have up to 4 units on this. This is an amazing product, right? Fixed rate, timeline up to 6 months for repairs, You have two options, limited and standard. We'll go over what limited and standard are, kind of from the middle to the top, right? So you will need a HUD consultant on a standard, and what a standard is it has a minimum rehab amount of $5,000, and then the loan amount just goes all the way up to the FHA county limits, loan limits, right? Some places it's like $600,000. The maximum rehab amount for the limited is $35,000. You can't do any structural work. So if this was an exterior wall and I wanted to put a sliding glass door here, I couldn't do it here. I'd have to do it here, right? Because we need an engineer to come and say, okay, is the roof's leaning on that wall? You guys are going to cut in, and they got to plan it all out, right? You won't need a FHA HUD consultant. And what the HUD consultant does is the HUD consultant is going to go and verify the estimate, verify that the property is, that the contractor is giving you a good estimate, and that work is needed. That work that's there is needed to be done. They will pay for the permit costs. So what will happen is you'll get a draw at the loan closing. Contractor will go and they'll go to work. They'll take the money to get the permits. They will any architectural work that's done that's needed on the standard, right? But this doesn't have a limit. This has the top limit. I mean, is near $600,000, depending on where your county loan limit is. It used to be 541, 250 way back when. Now it's definitely went up because the property went up, right? Inspections up to 5 inspections for the max limit. And here's the biggest thing. It doesn't. I don't know if it says it on here how many contractors you can use. It says it in a later slide. You can use one contractor here. You can use up to 4 contractors for the other job, right? So you get a GC, that'll cover everything. But if you want to piecemeal everything and get a bunch of estimates, they're only going to take up to 4. What are the repairs in the limited? So simple: flooring, HVAC, appliances even, replacement. So you could redo the whole kitchen with all new appliances. Kitchen and bathroom remodels, weatherization, pools, you can weatherize your pool as well. Exterior and interior painting, minor remodeling repairs, roofing replacement, any safety or health issues, any energy efficient improvements, including solar, right? Solar or a water system or a landscape water system, and septic system improvements as well. Going with the standard structural altercations, like we were talking about with the sliding glass door on the exterior wall. Connecting to public sewer or water, that's popular sometimes. Somebody has a septic or a well and now they're going to get a light pole out there. We can do that as well. Some larger landscaping projects, and improving accessibility of disabled persons, even up to an elevator. You can use an elevator on this, right? Let's say you have 3 floors and a disabled person has a wheelchair. They need to get an elevator or one of those things that go up the stairs. Building of storm shelters is pretty unique, and the installation of heating and cooling units, so a bigger HVAC system, and all these repairs that are in the limited as well. So here's how this process, we'll go over how the process goes really quick. So milestones: you get in, you get pre-approved. You say, hey Douglas, I'm trying to get into this property. I'm a first-time home buyer. I found a quadplex that I really like, and it can be 1 to 4 units, right? But I found a quadplex that I really like. I make about $60,000 a year. The property is like $375,000, $450,000, whatever it is. Can you qualify me? I have very little debt, $600 in debt. The DTI is probably going to make it there, right? So, because we're going to use those incomes from those other properties, I'm going to go and I'm going to check on the rent for that property, and I'm going to help you out, hold your hand, and go through it. What will be the rent that we would get on this property, right? After we get you pre-approved, then we go to the realtor, sign your buyer broker agreement with the realtor, and go view the house. You're going to note the repairs. You're going to bring an inspector with you, hopefully, right? If you're really serious about purchasing the house, or if you think you can bring your dad or whoever it is, or your mechanic, like people do sometimes. But you can bring them to kind of assess how much work would need to be done. Have that conversation afterwards and say, okay, so this is going to take probably about $35,000 to do the floors of this 1,200 square foot home. Plus, we're going to do one of the bathroom that's in it, and we're going to do the kitchen, right? So about $35,000 total it'll take. now you're going to find a contractor, right? So we submit to the lender, hey, we're looking at doing this property. We're under contract for this house, right? And then you're going to find the contractor, and you're going to get from the contractor detailed bids and plans from the contractor, right? You're going to sign an agreement with the contractor, and then the work plan is going to be provided by the borrower. What's going to happen, and then we're going to issue you a streamlined statement of understanding for the limited product only. You're just saying that, hey, you can only go up to here. If it does go over this, it's going to be into something else, right? And then you have a homeowner contractor agreement with the contractor, and then on that contract, you're going to also include the addendum that says that this is a
How can I get
two-way
a home equity line of credit to buy a bulldozer so I can raise my neighbor's house?
Are you joking? Like, so you can raise it, or you're going to help? You're going to help him lift his house up. We can get you a home equity line of credit. You can definitely click on this this button right here and just type in HELOC and HELOC, and we can work through it. And it's fairly simple. Like, you can get funding on a HELOC in as little as 5 days, but it's typically about 12 days, and it'll be in your bank account. You add that 203K purchase addendum just to let the seller know that it is there. They like to have 45 days. I think my longest 203K was 38 days, because the contractor that the buyer selected, I think his dad died, and then he came back and he was submitting half-assed documents, so on and so forth. And then if you're doing any structural work or anything like that, like the architectural drawing, right? Funds are going to be set up for repair reserves and contingency reserves on the bigger projects. Any inspection fees and any mortgage payment reserves on that project are going to be set up in an escrow account. If you don't know what an escrow account is, it's just an account a savings account that title has control of, or the settlement, your lawyer in your state, or the title company, whatever settlement company there is in your state. At the completion of the work, any unused funds, so let's say we put $20,000 in there and we only needed 15, the other 5 is going to go directly to your principal, right? Next, the contingency reserve. So this is important, right? This is where the HUD consultant steps in and they say, hey, listen, yeah, this estimate accounts for, 1,200 square feet of flooring, but it's a 1,200 square foot house, right? We're going to need up to 10% for 10% extra for any of those cuts that don't make it. Somebody breaks something, whatever it is, a pallet comes in and it's cracked, whatever it is, and then it can be increased to 20% if the construction underwriting team. So there's 2 underwriters that it goes to, and the underwriters are fast. I'm going to tell you something about where we work. We're the #1 mortgage broker in the country. We have elite status with all of the top lenders in the country. So UWM, Town, AFR, United Home, just a lot, or Union Home rather, just a ton of companies. So our underwriting, whereas it would take, if we were just one guy in an office, our underwriting is going to be anywhere from 4 to 24 hours, right? You're going to have it back within 24 hours. But we are moved up in the queue in front of everybody else because of the amount of volume that we do. We've done $11.9 billion in funding over the last 18 months. So from now till 18 months ago, I think it was March of 2024, we've done $11.9 billion in home ownership funding, right? And that's just the stuff that's recorded. Some of that stuff isn't recorded if we broker out and help other people as well. At the completion of our project, it goes to the principal balance, but the percentage is decided by the construction team in the underwriting and the consultant. So they'll come to an agreement. Hey, yeah, so this is what we're seeing in the market. This is what this project would need, and this is how much we're going to need left over. Right? Welcome in, Scott. Welcome to see you again. All right. So additional costs. I told you, Scott. I told you I teach stuff too. Right? Told you I teach stuff too. But they want to see the rage bait prompts. We can do that a little bit later. We'll definitely do those every night. We'll do the rage bait prompts every night. We're not going to do it during the day because I riled up some people in my office as well. And it wasn't really a rage bait. It was just a statement, and it touched some people, right? But we need to have those conversations. But now we're doing teaching as well. So we'll do the teaching in the morning. We'll do the, thanks for the like, Bay. We'll do the teaching in the morning, and we'll do a little bit teaching at night as well. To get those mindsets right, and then we'll go into the discussion, big discussion, right? I think that's fair for everybody. So they can't say, hey, I don't teach, right? because we do. If we pay attention, we teach, right? So any additional costs, this, I mean, look at this. This is 1.5% of what? The 350,000, so it's like $3,000. If that's the case for the draw administration fee, so just like that's a finance fee. Any inspection fees go in the escrow account. Repair reserves go in the escrow account. Title updates are going to be made known to the lender, and the required permits are going to be pulled, and the architectural and engineering fee will be in there as well as extra payments that you should be aware of, right? Because those things, people are like, oh yeah, I thought that this is all that it took to get this loan. But yeah, then there's permits, then there's and permits cost money, they take time. So mortgage payment reserve, a max of 6 months of mortgage payments can be included in the cost of the rehab. So let's say that the property is in Massachusetts. I've had this happen, so I'm going to say it. Property's in Massachusetts, and we're looking at winter. So right now, let's say we do this right now, and now Massachusetts is getting cold. Ground gets cold. Hey, it just snowed on November 3rd in Massachusetts, and it's down to 20 degrees, and the ground is freezing cold, and we need soil samples for a septic. But then what happens? Then the university who takes the soil sample, number one, they can't even get in the soil to take the sample. Number two, they can't get it to the university because the university's taken off for the vacation, right? So you have up to 6 months of mortgage payments can be included in the cost of the rehab, right? So you don't have to move in, can't stay at home. The monthly mortgage payment amount will be made directly directly from the escrow account, and the servicing accounting team handles that stuff. So we're walking you through the whole process, and we're going to walk you through how much it's going to cost you, right? And looking at pricing, looking at what the rates are, looking at how you can actually qualify for something like this, and you're going to walk into equity. That's the biggest thing. But they said I don't teach. They said they can't do it, right? Rehabilitation criteria. So right there, max of 4 contractors. Repairs needed to comply with the local code. Permits. You need permits. They must be obtained prior to the start of work. Believe it or not, people try to get permits after the work is done, after they've put up the sheetrock, after they've painted. They want to get a permit for installing electrical or plumbing behind the wall. How are you going to do that? They have to be done prior to the start of work. Proposed changes after closing must be approved by the construction underwriter. And you can put in a change order request, easy peasy, as work's going on. And no self-help. So it has to be an arm's length transaction. So you can't have any family members as your contractors or anything like that. Lots of people. So the most people that I talk to that want to get into rehab, renovation, FHA 203K for purchase multifamilies have building permits or have building experience or work for a construction company or are handymen, and they do this stuff, right? And what ends up happening is they think that they're going to do it themselves, and that's what this states right here is you have to use a contractor, and there's a self-help disclosure that says that you can't get in there and get your hands dirty if you own the property, right? Lots of reasons for that, because people, move money around, and if my Uncle Jake was doing some work, and they tried to charge an astronomical amount, and then it kicked back, and then all of a sudden now he's got $30,000. I'm financing somebody else's loan type of thing. It's just a thing where they're making sure that there's no avenue where they can get money that's undocumented, right? I'm going to tell you, so if you're just tuning in, my name is Douglas Wilkerson, Senior Loan Officer and Branch Manager at Edge Home Finance. I go live all the time. I talk about how you can realize your dream of home ownership and secure your financial freedom through the use of real estate. If you do need to contact me, buy-in, refinancing, renovating, fix and flips, commercial, HELOC, DSCR, in any state in the United States, except for New York, just hit that Service Plus button, or you can DM me directly. All right? We'll get into it. So this is the contractor requirement forms. This is something that's required really quick. It's just they have a license, they're insured, they have W-9, liability insurance, workman's comp, and you have to have the agreement signed by you and the contractor as well as the borrower. All right? A consultant. So the HUD consultant is kind of what we talked about a minute ago. What is this person's job? Well, they appraise the property, number one, and then they also go over the estimate, right, for what's needed. So if you're getting floors and they go into the property and see if there's, is there any floors in the property? Well, there already are floors. They're new floors. Well, why is this on here? We don't need them upgraded, right? Banisters, railings, stairs, windows, all this stuff. He knows the market value of it, so make sure that you, as the borrower, aren't getting hosed to get a fair market value and to get a fair price on it, right? It's only needed when the renovation cost exceeds $35,000. And it's for the standard only, right? Because the standard is over not over $35,000, but it's only for the standard, for the structural, everything that's included and limited and so on and so forth. All right, bid plans and specs. This is a really quick slide. Not really anything on here that you need. This is more for builder facing or contractor facing. But it has the we have to plan it out, right? So this is all done for you. That's what the magic is this is all done for you. The contractor's going to do it. The lender, myself, the broker, is going to do it for you, and my processing team, right? It's going to have the nature of repairs, all based on what you want. Hey, I'm waving a magic wand. I want to move into this 4-unit property. I want to move into this 4-unit property, and I'm going to renovate it before I get in there. So I'm going to move in. It's a 2-1. Or 4 units of 2-1, I'm collecting $1,000 rent or $800 rent or $1,500 rent, and move into that property, and I made cash flow on the property, but I guarantee you're going to pay less than you get into your mortgage. So Home Style is the same program. I knew nobody would come in here if they didn't see the rage bait. They're flying past. I see them scrolling. Whoop, 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 whoop. I see it, but they don't want the rage bait. We'll do that in a little bit. Program highlights, what sets it apart. This is basically, so here's how this works. You buy a property, FHA, 203K, 3.5% down. You get seller concessions. We're going to do this in a second. You get seller concessions to move into the property. Your seller concessions have been exhausted. You got the max seller concessions at 6%. You're getting on a $400,000 property, let's say a $450,000 property, times the max 0.06%. What was that, $27,000? Are your loan costs going to be over $27,000? Probably not. Probably not, but you have to put that 3.5%, 0.035 times 450. It's $15,000, right? So anything that isn't paid, you're probably going to walk into this property with $10,000, right? And you're qualifying at a much higher value. You're getting a renovation, which is after you get an after renovation value, and then you're walking into equity, right? They don't want to learn this though, right? They want to come in and talk trash. But this is for a primary residence, right? You have to live in the property, right? You have to have the intention to live in the property for 1 year. So you live in 1 unit and your other people live in the other 1, 2, or 3 units, right? For a 4-unit quadplex. If you want to do this again, you can't have another FHA loan just because you want another FHA loan. You would go into, you could stay in that FHA loan, or you could leave and go into a Home Style. And it's the same exact product, but it's for investment homes, second and primary, right? No minimum dollar amounts, 1 loan, 1 closing, fixed rates, 30-year amortization, no restrictions on improvements. So you can do, this is another big thing about the Home Style, you can actually do luxury items like a pool or things like that, right? Obviously you need a little bit higher of a credit score. And we don't need to go over that, we don't need to go over that, because we did all this. It's the same exact thing as the FHA renovation. That's it. So let's see something. You want to see how much is, or how we can make this actually happen, right? Purchase price $450. I've been through this so many times, man, with people. I've been through this so many times with people. They've seen it and they've been like in awe. Okay, but here's the thing. We can teach it, but we can't change the mindset. That's what I'm trying to be here for, is changing the mindset, right? This is something we're going to show you, that somebody making $55,000 a year, I'll even pull up the property, right? We can go find the duplexes. You want to find the duplex, you want to sim it, right? You want to find out what the duplex is going to look like. Let me see, pull up. Let me see. The bridge version. Look at this. This is 636 duplexes in 1 zip code. or not one zip code, one township. Come on now. And we can actually look up these duplexes, right? Oh, they're all owned by corporations. The corporation is you with an LLC. I mean, come on, guys. How many bedrooms, or how many units are there? 4 units, 8 bedrooms, 3 units, 3 bedrooms. These are 1-1s, right? 4 unit, 2 unit, 3 unit duplexes and quadplexes and triplexes, right? So we have that information. We can go look at the property. We can go look at the property, the specific property in here in any state zip. We can search a specific type of property, right? Let's look in Kylene, Texas then. Okay, we're in Kylene, Texas. Let's do it. Let's search it. We can add in some of our filters, like, hey, I want to look at just people who are out-of-state renters, or out-of-state owners, tired landlords, and the property's vacant. Do you think we'll get a good price on that? We probably will, right? Come on, search Kylene, Texas, my man. There we go. 35002. And just this guy pops up. Well, it's going to be in Minnesota. There you go, Avon, Minnesota. So let's just look at this random property. I think we have filters on is why it's not opening the property up. Or that property doesn't exist. What's happening? Let's just do one of these that we found, right? So we'll get to this one. We'll pull one of these addresses that we found over here in Jacksonville, Florida, and we'll do 740 Ernona Street. Let's see what this is. Let's see if it's even something we can do. 730 Ernona Street, 196, Duval County. It is. Hey, it's a triplex. Very nice. 730 Ernona. Or 740 Ernona. See, I gotta copy this. Copy, and let's get out of here. So this is a live property right now, right? Paste. Oh, look at that, it's live. What are we gonna find? We're gonna find that it's a 6-bedroom, 3-bath, right? Oh, this is like Zillow. Oh, it's the right price too. Perfect. It looks kind of dilapidated. This looks like it could use a facelift, right? Non-owner occupied, okay? It has occupancy in there. We can find out how much they're paying in rent. We can also see this owner's portfolio, if they have any. Oh my God, is this guy doing what you're supposed to be doing? This is just a guy we pulled up randomly. Is this guy doing what we said we could do earlier in the day today, when everybody's like, oh, Douglas, you're a bum. You're trying to get people into stupid stuff, right? You got a triplex, 3-bedroom, 2-bath in each of the units. The guy's got $2.27 million in portfolio value. After his mortgage balance is paid off, he's going to have another 4.5, right? 6 properties owned. He's doing the damn thing. And what is he doing? Are these attractive? Are these attractive? Somebody's got to rent, man. Is this an attractive property? It's not, but it's a 3-unit property. He's collecting rent for. Last sale was $1.8 million. That's a lot of money. It's a lot of money for that. 1.2 million in 2022. Got a 5.27% interest rate from Seacoast National Bank. So it's got all his mortgage information there as well. Shows how much equity there is in the property, right? The estimated value of the property is $433,000. This is something, so it looks like he's upside down, right? We would go and we would call and we would find out. How would we call? We skip Trace's number, we get his number, his email back. Very easy. We go to the property, we talk to him. It says the estimated value is 433. You cannot go by these values, right? We have to find the actual value, which the only way we're going to get the value is we're going to appraise it, right? We might have an appraiser go by there. Hey, do a drive-by, see what's going on in that area. Here's the thing, right? This is, oh, the corporations are owning the properties. This is a dude, man. I guarantee you this is a dude that lives in Royal Palm Beach. How do you get a house in Royal Palm Beach, Florida? Probably by owning 6 properties. 6 triplexes and duplexes, right? But MKNS Royalty Group, is that BlackRock? Somebody tell me if that BlackRock. Is that BlackRock? Does that say BlackRock? It doesn't, right? This is private equity, all right? So, what do we do from here? We get this guy's number, we call him up, we research the property, we go to the property ourselves. Does it really look like this? This might be an old picture, right? I mean, we can take the address and put it into Zillow and see if we have any pictures. I've seen a lot of this stuff, to be honest with you, look a whole lot different with updated photos in Zillow. And We can look in prop stream, we can look in prop wire, we can look at a ton of different places and try to sit on our couch and do a lot of this work as well, right? And which is easy. So pop me up. There, it looks a lot different, don't it? Don't that look a lot different than the crap that we just saw? Let's see, come on now. Let's see. Yep, it's all renovated inside. Look at that. So, what's the rent going for in this part of town? Right? What are the rents going for in this part of town is what we would look up. And I'm going to tell you what we do. So this is a triplex, right? Let me see here. Let me go back to listing. Here we go. Because you can go and you can see here it is $16.96 is the estimated rent.
What up, Duggett, man? I got a question. If you were to get a duplex, would there be considered two?
If you were to get a duplex, would there be considered two mortgages?
To different address.
No, sir. No, sir. I took a guy from Washington. I actually just talked to him yesterday. He's 25 years old. He's in the Navy now. Came from Washington into his first home was a duplex, 2 separate addresses next door to each other. He renovated them. He's in one. Now he wants to leave. He's been there for a year, and he's going and purchasing another duplex to do the same thing. And then he's going to purchase his primary while they're paying for that one. But he's got a great interest rate. I think it's like a 5.75, and I think if we price this today, it'll probably be a 5.75. But this estimate is not accurate, right? Because they haven't. When he bought this, he refinanced it in 22. But when he bought this, I think he bought it for 4.30. But it's probably somewhere. It's probably somewhere way up there.
So
this
the first time home
estimated
buyers
rent.
3.5% down.
Oh yeah. You got it, my friend. He did his 0% down because he was in the military. But yeah, you can. So check this out, Caden. You can put 3.5% down, get into an FHA, multi-unit family up to 4 units, renovate going in, and get the funds to renovate going in, so that you raise the value of the property and the attractiveness of the property. Qualify with the rents before you even get into the property, and then you go move in the property. If you're paying $1,600 in rent now, and you pay $800 in your mortgage, and all your contribution to the mortgage is $800,
Doug,
is that
if
not
you
winning?
remember me, but he'll be reaching out
I
to
remember
you
you.
soon about my ideas.
I remember you. Absolutely, I remember you. Definitely, reach out. I love talking. Actually, I used you as an example the other day. We had a live this morning where people were going kind of nuts because I guess I rage baited them a little bit.
Purchasing info to 6 months.
You got it, yeah, man. Right here, or you can just catch me up. Just save my stuff up here. You can search my number using those numbers, and plug it in your phone as mortgage broker. All right, so
I got your email.
yeah. I think it's in. I think if you click on my BIO, it says email right there, and you can email me directly through there. So $16.96. We're gonna do $16.96, and we're gonna add 2 properties, right? Caden's seen this before. So let's say we get this for $550,000, right? Which is pretty decent, right? $550,000. We're gonna put.
Gotcha, I will look in your bio, thanks, Doug.
Yeah, you got
Can't
it.
wait to talk to you soon.
Yes, sir. You too. All right, so we got $550,000. We're gonna buy this. The FHA requires a 3.5% down payment. Where are we gonna get that from? You can get it from a grant. Oh my God, I almost forgot the best part. So not only can we do an FHA loan for 3.5% down, not only can we do a multi-unit family, not only then this is all together. This is this loan product. Not only can we do a renovation and get into the property renovated like this, right? If it was dilapidated, we got it for a good price, and raise the value, walking into equity. Not only can we use the incomes that the property is going to generate to qualify to purchase that property, to renovate the property, but we can do all that with down payment assistance as well. That's powerful. So literally, you and get seller concessions. So literally, we could be bringing damn near nothing to closing. We could be walking into this. Ideally, if everything worked in our favor, right? We could be walking into this property with $1,500 in our hand and say, "Where's the keys?" My boy been here all day. I told you I teach, Def. You didn't see it? I went back and saw
Indiana
your
offers
comments.
a 6% down payment assurance.
Indiana offers, hey, there you go. Yeah, they have grants, they have bonds, they have down payment assistance with the lender. Damn, Walmart will give you money in certain programs. There's leasing agents at apartments that'll take part of your money and give it back to you as a down payment. But you can get all of this taken care of and walk into the house with $1,500. How much is it going to take me in income to do this?
Tell me this, if you're that good, why are you on TikTok preaching to three people?
Yeah, man, because I was waiting for all your friends, your 60 friends from earlier this morning. I don't do this for, I don't do this. I'm going to tell you, so honestly, I do this because it helps me, number one, right? And I want to help people. So people, I mean, I'm here 2 months, man, all right? And I don't know if you know how TikTok works, but TikTok works. The longer you do it and the longer you stay consistent, you're going to have more people. And I know tons of people, but people see rage bait, they want to jump in because somebody touched them. I want to help. But yeah, we're worried about semantics, right? I'm trying to get you into a home, Def. I'm trying to get you into real estate investment. All right, so let's see. Financial information. How much money do we need to get into a $550,000 property, right? Oh my God, $7,500 a month? Here's the DTI. We can go up to 57%, right? Let's put it down to a 640 credit score. Because I want to be fair with everybody, right? You got some skin in the game. I want to be fair with everybody.
He's just doing his job while you're sitting here watching him.
I want to be fair. 640 credit score. Boom. $11.9 billion over the last 18 months in funding. Ouch. That's why. That's why. I got time today. Why are we not letting me type this? Let's go. There we go. 640. All right, let's type it here then. Maybe I got a number lock on. 640. There we go. All right. I need a new battery, I think is what it is. All right, so we got that in there.
11.9 billion funded?
Yep, 11.9 billion funded in the last 18 months. All right, let's see. Purchase credits. What do we do? 550. What do we do? 550,000 times 0.655000 times 0.06, 33,000. So we're gonna add our 33. Yeah, this battery's dead. I gotta get some new batteries. I gotta talk to my wife. She got tons of batteries in storage. I'm gonna get some. All right, 33,000 there. We're gonna add another 1,500 because we're gonna give a good faith estimate. All right, so we're gonna take that check that we've been saving and add that for a good faith estimate. Then we're gonna go down here, and what do we say the rents were for the triplex? First off, we're gonna, let's see, they're down here. This is a multi-unit. Where's it at? 3 units, right? 3 unit, no, not 2 units, 3 units. 3 units. And I need to save it, and then this will pop up and will give me the opportunity to put in the cost of the rents, right? And you're allowed 75% of these rents. All right, so we have 2 units. Where are they at? Where's the rent? Oh, it's down here. It's up here, I'm sorry. Right there, calculated manually. So we're gonna have it calculated, all right? 1696. So this is a property. Let me walk you through it if you're just joining or if you're here, right? This is what we did. We took this property. This is all triplexes, duplexes, and quadplexes in roughly the same geographical area. So this is in Duval County, and there's 636. We went down to 196, and we selected 740 Ernona Street. We went and found out that 740 Ernona Street may look a little like this. Ugh. Then we punched it into Zillow and found out it looks more like this. A little bit better, huh? How much are the rents at 740 Ernona Street? $1,696 is the estimated rent for a 2-bedroom, 1-bath, 780 square feet, right? You want to rent that? Do you want to rent this? That's your rent. Remember that number. Put $1,696 in the chat because we're going to use that later, right? $1,696, 1696. Let's do it times 2 because we got 2 units, right? 16. Oh man, anybody want to use this calculator?
What's your YTD funded volume?
Why am I using this? Why am I using this calculator? Remember, I can't use this calculator. Somebody said 1696. I'm not sure right now, my friend. 1696 times 2. Well, we can check it. I'll check it for you. 3392. Just give me some time. I'll check it. Check it right here live. $33.92. I have team members too, man, Scott. That's why I do this. I meet people on here also, and there's a lot of loan officers struggling to do the business. And then what happens is, at the end user, people like you, possibly, right? The end user gets a bad deal from somebody who's just trying to get a commission, and you don't end up in the property you want. You know, you have a hiccup in your goals, things like that. So $33.92, we're going to use 75% of that. That's $25.54, right? I'm going to take $25.54.
Appreciate the info.
You got it, man. I'm here for charity, man. Like, seriously. All right, so let's do this. We're still at 54%. Let's go to products and pricing. Save that number. This should go down. That 54 should actually go down a little bit. There it is, 40. Oh my gosh, only 40% of our gross annual income. We got a car. We have a car. We have credit cards. So it's not like we're just walking around here debt free. We've only got a 640 credit score, right? The rate's going to be a little bit higher because they went up, like I said they would. And we're using two other incomes to qualify in those rental units, right? Remember $16.96, because that's the rent you would be paying for a 2-bedroom, 1-bath. But when we price this, we're gonna know what's really going on. 3 units, first-time home buyer, FHA, 203K. Let's price it. Who wants it? Who wants some? They want some. Remember, this was 5125. I don't know if you guys were here yesterday. This was 5125 yesterday.
What rate would you estimate at the 640 credit score?
I'm doing it right now, Bulldog. I'm doing it. We're doing a loan right now. I'm going to tell you all about it. This loan is for a triplex that we found, right? We found this triplex in Jacksonville, Florida, right? It could be anywhere. We can pull them from anywhere. And the rent was $16.96 a month. We put the 2 rents in because there's 2 other units. We're living in the unit, right? We got $33,000 in seller concessions, the max amount that FHA allows for a $550,000 property. We're pricing it right now, so the rate is actually not 5.875. So our debt to income is going to go down, and we only make $7,500 a month. How is this possible? This is what I'm talking about when people come in here and they're like, "You're a bum," and all this nonsense. And this 5625 is helping with your closing costs. It's giving you $1,195 on top of that. Let's just do that rate, just to be, and the rate is a 6524 APR, right? But that's going to change also because the fees are a little bit lower. So we'll go right to the fees. What does the fees look like? And I don't want to get into the fee screen. I will. You type fees in the chat, we'll go through the entire fee screen, right? But most of it bores people. They don't understand it, and it requires a 30-minute kind of conversation for them. So origination is $6,500, a flat fee. The appraisal, all of these fees are going to be padded, right? So this is an appraisal fee right here, $850. It's typically $600, $650. But then what if they have to go back because there's a battery missing in the smoke detector? That's a safety issue, right? So now the appraiser has to go all the way back. You can't even send a video of somebody. He's got to go all the way back, and it's going to cost you $200 to get it. So if that doesn't happen, then it drops off. Credit reporting fee is only like $68. We put $98 to keep it there. That's your upfront mortgage insurance premium. It's financed in the loan anyhow. Underwriting fee, a processing fee. You have your taxes and taxes and title. So your title, your settlement fee is probably going to be about another $1,500 more than this, give or take. And then you have your escrows. So your escrows are paid for the whole year ahead. So if it's, what is this, 1440, it's 1440 divided by 12, so it's $120 a month that you'll start paying when you close your loan and start paying your mortgage payment. It'll come out of your mortgage payment to $120 a month. Will go to furnishing an escrow account to pay for next year's, because all of this year, and from when you purchase the house, let's say September 25th, well, next year, September 25th, this will be paid, it'll come out of this, and then your following year is going to come out of the money that you're putting in now. Same thing goes for the hazard insurance or homeowners insurance and taxes. I'm sorry. This number is an interest per day. So if you close closer to the end of the month, $83 a day is going to count from that last day of the month, and it's going to go, hey, the last day of the month is $83. The next day is what's that? 172, something like that. 172.46. right? And then on and on and on and on. So right here it says 1248. If we close near the last day of the month instead of right in the middle of the month, we're going to save $1,200 or $1,100. Okay. Let's go down here. Oh my God, we did it. Somebody read that number to me right there, please. Please read that number. Are we bringing anything to closing? The down payment's covered. The closing costs are covered. And this is what we're bringing to closing?
Ed.
Can't see it. Okay. It says $186 cash to close. Right? Now that's probably going to end up somewhere around, I would say probably somewhere around $1,500 cash to close. 5.625 interest rate, right? At a 640 credit score, $550,000 loan amount, $530,000 loan amount over 30 years with a 42% debt to income. Let me see what a $7,500 a month times 12, that's $90,000. Household income, average household income in America is $90,000, right? 16, we're gonna go look at the payment.
Stop the cap.
16, I'm not capping. We're right here, Kelsey, you're back. You're back, Kelsey.
You good to know.
You're back. Let's look at the payment. Kelsey's paying $16.96 a month in the property right next door to me, okay? What am I paying? What am I paying? Here's the mortgage payment, $36.70. How much of that is Kelsey and her friend paying? 36. 30. That's not because of me. It ain't because of me. I don't even know Kelsey. 0.57 divided by 3670.57. And Kelsey, that's not nice, man, coming in here because people don't know that we don't know each other at all. 3670.57 minus, right? The 16, what is it? 1697 that Kelsey's paying. I'm just using. I'm poking fun at Kelsey because she or he is poking fun at me also. 2554 is the rent. So 1697 or 16 whatever it was times 2. We can use 75% of that as qualifying income. We're going to have 2544. So we do the mortgage payment is 3670 minus 2544. $1,100, $1,126 is what my portion of the mortgage is, and I'm living same as Kelsey, but now I own a $550,000 asset that I paid $1,500 to get into. This is how you win in real estate. If you're just joining, my name is Douglas Wilkerson, Senior Loan Officer and Branch Manager at the #1 brokerage in the country. $11.9 billion over the last 18 months. We funded Edge Home Finance. I go live all the time. I talk about how you can realize your dream of home ownership and secure your financial freedom through real estate. If you need to contact me, you can contact me right here, Service Plus button. I believe there's a little orange box with a white arrow going through it. If you want to request up, there's a little multi button. I don't know if you're the blue one or the pink one. You can jump up there, hit that button. We can talk about it. Now, somebody asked what the interest rate was. Let's see, you don't know. Stop the cap.
Because of you two.
That's the second time you said that. Doug Coates, welcome in. What rate would you estimate? So this is the rate right here, man, on this triplex that we found right here in Jacksonville, Florida. We get this guy to sell it to us. Guess what? We're only paying $1,100 a month for a $500,000 property, and rents are $16.97 in that area. You stop the cap. You stop the cap. What do you think about that, Scott? What you think about that? Hey, Polar Bear. Stop the cap, Polar Bear. Stop the cap. Just repeating what people say. I think it's the suit. I think it's the suit. I wore a t-shirt this morning. They were ragging on a t-shirt.
Hello from SW1.
A lot of haters.
Hello from, hey, what's happening? Washington, Brittany, what's happening? Washington's a great market. You guys are classy out there in Washington. You guys are super classy. I don't know if you just jumped in here, Brittany, but we just went over an FHA multi-unit property, owner occupied, using the rents from the other 2 units. We showed how you can find these properties. Go talk to the owner of the property. Let's see if we can bring it up here. There it is. So we went down and selected out of these 636 properties right here in Jacksonville, Florida. and just selected a random property, picked it up, pulled it up, picked up this picture here because we wanted to look at how much the guy, how many things he owns, what the mortgage is, and everything else. That looks like crap, right? But it's 3 units. It looks pretty good. Does this guy do anything? Kelsey, tell me how many properties he owns, Kelsey. Tell me how many triplexes he owns, Kelsey. We're capping over here. We're capping. We're capping off at $2.27 million in portfolio value. When these mortgages get paid off by people who are renting those properties, he's going to have $6.7 million, $6.8 million in 1, 2, 3, 4, 5, 6 properties. Stop the cap. So we took this address and we moved it over to Zillow, Brittany, and did it look like that? Here's the rent, $16.96. Just an average, right? Just an average. We're going to get a rent schedule and see what the rent, even if it's $1,500, we're still paying $1,200 for our share. Does that look like the picture, Kelsey? That's real life right there. Beautiful, isn't it? Oh my God, what did they do inside? That's nice and comfortable, right? That I can sit and I can have my peace and I can do my thing. And then we priced it, right? And we see that the mortgage payment is $3,670, and we're only paying $1,100 of that. How much you got to make? How much do I got to make? How much my household income got to be for me to do that? We figured that out too. Average. I'm going to give you guys. So this is what we talked about earlier today. I'm going to give you guys the average. Hey, how much does the average person make in America? Okay. Fair enough. It's $42,000 to $44,000 a year. Well, that's crap. Well, if you have a 2-income household, that's 90. You qualify for this, number one. But I'm not stopping there. I'm not letting you off the leash right there. What I'm going to do is I'm going to eliminate all the 15-year-olds that are in that mess, working 2 hours a week that are in there. I'm going to eliminate all the 65 plus who are getting fixed income, and I'm going to deal with just the 25 to 35-year-olds. It's $60,000. 25 to 35-year-olds, $60,000 is what those 25 to 35-year-olds make. That's a single person. You get a girlfriend, you get a roommate, whatever it is, okay? You take that money, and you're making $90,000 household income, and what can you do? You can move into this. This is a 2-bedroom, 1 bath. Go grab your friend. You guys say you're friends. Go grab your friend. You and your friend move into this property. You're making $120,000 a year, right? So you're bringing in what? What's that? $11,000 or $10,000, right? I have a deal like this right now going on right now. Right now. This one's for Be a Homeowner. That's her name, Be a Homeowner. It's our test file. $7,500. You can come in here. You're 42% DTI. Oh man, they don't have any bills. They don't have any bills. They're paying a car payment and a credit card payment. $400 car payment, $200 in credit cards. It's not like they're destitute. Undisciplined spending habits. Purchasing money on video games to buy new suits so you can come out here looking like this, right? Dancing, running around the course. Those are the things that are keeping you from becoming a homeowner. Those are the things. It's not the market. It's not the rates. It might be in the DNA, right? Those before you who've put all this stuff into your head. Yeah, the system's against, and we tend to gravitate as people, like we get up, boom, feet touch the ground, ready to take off. We put in our day's work, we're tired. Guess what? Devil seeps in. Yo, ain't you tired? Man, sucks, don't it? Those are the type of people you don't need to be around. You need to take your ass to sleep, get on this live where I'm not palatable. I'm not going to coddle you. I'm not going to talk sweet to you or anything like that. It's not going to happen, right? A lot of people don't want to hear me talk. These are the numbers. The numbers can do the talking, right? Does this seem like it works? Put a 1 in the chat if you think this works. I got nothing else. Somebody asked me, Scott, you still in here? $11.9 billion over the course of now my personal is much lower. We'll look me up because I'm not a bum. Look me up. Mine is very much lower. My funded year to date or over the last 18 months, whatever it is. We'll look me up, no doubt. You can look me up too, but I'll look me up. And I'll tell you all about my team and how I funnel loans through my team. Come on now. Douglas Wilkerson, there we go. That ain't me. That's Douglas, Georgia, originators. But I funnel a lot of stuff through Wilkerson. Come on now. I funnel a lot of stuff through my team. DSCRs don't get put on here, right? So there's no funding for DSCRs on here because they don't rate their commercial. My commercial stuff doesn't get put on here. Any non-QM deals don't get put on here. And my focus has been there, right? Here we go. Let's see, last 18 months, 10.4 million. Not too much. Not too much. I've been on TikTok, I guess, doing nothing, right? But I've had months where we've done 4, 6, right? I have 2 loans with a loan officer in another state right now that I gave them to help, and they work under me. But if we're looking at things like, oh man, what kind of car does this guy drive? Hey man, what kind of this? What kind of that? That's a stupid way to live life. I'm gonna tell you flat out. Sticking your hands in other people's pockets. That's a stupid way to live life. When you're not listening to the content, right? You're not listening to the context. You're not finding the character. Long time ago. I'm gonna let you guys go. We'll talk about all the nonsense in a minute.